Good morning, folks, and welcome to another one of my videos. I hope you had a great weekend, by the way, and I hope you're suitably refreshed. I hope you had a constructive weekend, an enjoyable weekend, but now it's back to business. So what pairs have I got on watch today? I have West Texas Oil and Euro Yen. So I'm going to break them down for you now. The higher time frame narrative, those of you who have been watching my videos will know why I'm looking at this, if you can remember those videos. But the reason I'm looking for an entry on West Texas Oil today is because the higher time frame narrative tells me that we broke above this standout liquidity point here. We had two near misses. These are the things, as I see them, that stand out to me based on the way that I trade, which is the Falcon strategy for those that don't know. There is a link, if you're watching this on YouTube, there is a link on my YouTube profile, which you can check out if you so wish, if you wish to be a member of our community and trade the way that we trade, learn the way that we trade. But what stands out to me is that we have a near miss here. Okay, so price comes up to this standout liquidity point. There's nothing else of any note until all the way up here. So we have this standout liquidity point, price comes back up close to that area, near misses it, which means there's likely still liquidity in that area, or this is still an area of value, of interest to people. It comes back down again, it gets even closer, but it near misses it again. We then get these impulse correction continuations, which is the natural ebb and flow of the market. We then get a sideways correction, but when these sideways corrections get this wide relative to the move down, the likelihood of the natural ebb and flow of the market continuing, which is a impulse correction continuation, decreases, and the volume which is built up becomes more likely to break to the upside, which is exactly what happens, as you see here. This structure, we have a middle section within it, an impulse correction continuation, but as I say, it becomes so wide that a move to the upside becomes more likely to take out this area of interest, this area of liquidity, before the long-term push down, which is exactly what happens. So one of the clues for me that we would likely tap into this area, and when we do tap into an area which is this significant, it's often the case, more likely the case, that we will actually break it before we push lower, for reasons which I've explained in my previous videos. If we're on the lower time frames, it's more likely that we'll just tap into an area and then go, as opposed to breaking it, because of the fact that when it's such a standout area of value, the brokers and so forth put out their messages saying West Texas Oil at, in this case, a 12-year high, which encourages people to buy the highs. I remember when I first started trading, I used to see these little ticker reels on my broker's website when I used to trade through the broker's website. And that used to encourage me. I was only demo trading at the time, but that used to encourage me to actually buy. And then when I thought about it, I thought, why would that encourage me to buy? Surely, this is when I started thinking critically. I thought, surely if something's at an all-time high or a 12-year high, that's a high price, which means, a price to sell at. If something's at a high price, you sell at that price. Having run businesses, and I still run a business myself. So that didn't really make sense to me. So I thought maybe they're doing that. Maybe they're doing that to encourage you to buy the highs and sell the lows, which is what people do. So when we have a three-touch structure such as this, which doesn't quite line up with an area such as this often causes confusion. Price breaks out of this structure, and that in itself causes a lot of people, they think, well, it's broken out of this structure. This trend line didn't hold, so then they start buying, but buying into an area of value for a high area of value for a sell. Okay, and one of the clues for me that we would likely tap into this area and push down is the fact that we have quite a deliberate impulse correction continuation. So once we broke out of this structure and broke out of this structure, this correction here within this impulse correction potential continuation gave me a clue that this continuation is likely a completed 1, 2, 3 leg. So as I drill down, you can see, if I just zoom into this area, it is slightly unusual. This isn't the best sequence. It is slightly unusual to have an impulse and such a large correction before we push down, but sometimes that does happen. So we break above here, we have this impulse correction, and these trend lines which you see are just me separating the structures to try and make sense of where one structure ends and another one begins, and this is what we call pattern separation. So we have this impulse correction, so forth. And I'm just trying to analyze the sequence. I'm trying to analyze, generally speaking, we see the tight corrections first into slightly larger ones, into smaller ones, into slightly larger ones, smaller, larger, and so forth. And then we typically see these much bigger corrections about halfway between a range. So in this instance, now that we're trading back within this structure, we're kind of about halfway between the range of here. We just measure this, and all the way down here, which just conveniently almost lines up with this area here. So that gives me a clue that this is a potential impulse correction continuation. And of course, if we measure it on the break, because sometimes the volume which has been built up within a correction causes price to move much further, which is why we measure it on the break as well. That would conveniently line up with here, which almost perfectly lines up with that. Okay, so these patterns that we look for, there's mathematics behind them. They're not just random. So what I'll be looking for today, if we just drill down ever so slightly. So we've had these impulses and corrections. So the market is moving in sequence. It's not the greatest sequence, it has to be said. But what I'll be looking for today, we have broken above this standout daily double top there. Okay, now this could be, because we have come from a move up and quite a direct move up, this could be a move down to this area to push up, okay? And then we would have that impulse correction continuation. We would have a 1, 2, 3. That could happen, but I also like to zoom out on the higher time frames. It's important to remember we have broken a standout liquidity point, and there's nothing of any note that this is so far away that it's much less likely that price will just suddenly break out to the upside. So the question I ask myself is, if this is a move down to tap into this area to go long, where is it actually going long to? Because price has done what it needs to do. It's taken out this high. So why is it going all the way back up there? Okay, so that's the question I ask myself, which in my opinion at this moment in time makes it more likely that we are just catching people the wrong side of the market, catching people the wrong side of this high, because this is a daily double top to blast straight to the downside. Of course, this would be a good profit taking area, so we could push down to this area and we could see a sideways correction. Bearing in mind this is the daily chart, we could see it go sideways for quite a while before it pushes lower. But at the moment, this is just looking like people being caught the wrong side of the market before a push down. And even if we only push down to this target here, there's more than enough profit potential all the way down to here if price was to reverse and to suddenly go long, or to stall for a long period of time. Okay, and one of the clues for me that we likely will push down is because one thing we see when people get caught the wrong side of the market, one thing we see is we often see slightly larger corrections into smaller corrections, and you can see that here we've got this kind of push up, larger correction, smaller correction, and then the correction, we get a bit of a pullback here, and then we get a really small correction. This is often people just getting out of the market before price comes crashing to the downside. And one of the things that I like about this trade setup, and this is what I'll be looking for today, I'll be looking for price to break below this ray line, below this area of value, and to then correct. And as I said, the correction is the confirmation that those of us who trade the Falcon strategy look for to determine whether price is likely to move in one direction or the other. Okay. And what I like about this is when you do get these tighter corrections, these smaller corrections, and price is quite direct, if it does come crashing down, it usually crashes down with the same level of aggression as it moved up. So this level of aggression, it would often mirror it. Mark Douglas in Trading in the Zone talks about the symmetry of the market. So if we got symmetry on the way down, this would likely be an aggressive move. And even if we stalled in, here temporarily, we would still have something in the region of 5%. But I think the first target, because of how direct this move is, would be down here. And then we would be looking at something in the region of 9 to 10%, depending on the size of the correction and the size of my stop loss. So that is what I'm going to be looking for on West Texas oil today. I do apologize if you can hear that noise. That is my dog, who often comes in my office with me, having a bit of a shake. But anyway, I digress. So I've got an alert set just above this ray line, and if that does not trigger, then I will not be looking to place a trade on this pair today. We could just correct sideways and then come crashing down tomorrow if that actually happens, because it is actually a bank holiday in the United States and Canada today, and of course West Texas oil is traded against the US dollar, so that may be a factor which comes into play, but we shall see. We should trade these on their own merit. West Texas oil, has enough, um, um, liquidity to move by itself. But of course, we have to remember that it is traded against the US dollar. So the next pair that I haven't watched is Euro Yen. So let's have a look at this. Why are we looking at this? So I am looking at this one because we have this impulse down followed by this massive correction here. And what did I just say a moment ago? I said when a correction becomes very wide relative to the move down, you can see this is wider than the impulse down which preceded it. It becomes more likely that the price will not commit to the downside. We will not see this impulse correction continuation, but instead the volume which is built up causes what we call an M style pattern, which is where we have a move down like that. You can actually see the M style. You can see the M style very clearly, or W, whatever you want to call it, right? We often see these when it's basically just volume accumulation, which builds up so much volume that it breaks to the upside and doesn't go impulse correction continuation. Okay, and one thing I like about this is that we have this 1, 2, potential 3, which kind of doesn't line up with this area. And these, as I said, if this was to complete, we would likely, because the trend line is so close to the liquidity point, we would likely find our way all the way up there. And you can see we have this kind of middle section, this kind of 1, 2, 3 within this structure, which gives me a clue that we're perhaps moving all the way to the upside. Okay, to complete that 1, 2, 3 structure. And one of the clues for me that this will likely happen. So we've got the impulses and corrections here, but one of the clues for me as we zoom in, bearing in mind this is the daily chart, the narrative for me is that we have this 1, 2, 3. We break out of that. Price is trying to find liquidity. It finds liquidity. It kind of retests the back end of this. So we have a 1, 2, 3, which doesn't meet up with anything. Price breaks out of that. And I've said when we break out of these 3-touch structures and tap into something, the moves up, because it confuses people. People think this trend line isn't holding anymore, so they try and get short, not realizing they're getting short into a retest, and this is a sharp point at that. When it's sharp, it likely means that a lot of orders were placed in this area very quickly, which is why it moved up very quickly and moved down. We tap into that area, we then break back in, and these moves up tend to be very aggressive, and so you can see a very aggressive move up. So when I drill down, what's the narrative there? So now I'm looking at the sequence again. Everything else looks fine and dandy, so to speak. And we have this. You will see these. You would see these more clearly on the 15-minute and the 5-minute chart. But there's a small correction in here. So with this impulse tight correction, impulse slightly larger tight correction, impulse smaller tight correction, impulse into a larger correction. This is a good sequence. Then we have a tight correction. The reason we have tight corrections within or often on the break of these larger corrections is because the volume has been built up within the larger corrections, so it doesn't need to correct for as long before it then breaks to the upside. As you see here, we have a tight correction just on the break of this, or just slightly through, and then we get this larger correction. So this is a good sequence of trades, corrections rather. And then we have, just to touch on it, what did I just say a moment ago with this sharp move? So we get this sideways correction, but we have this sharp move here. So we have sharp move down, sharp move up, giving me a clue that there's perhaps a lot of liquidity in this area here, and that's why we've come back down now, potentially. Now, what we also potentially have, and this may not be ready by the end of the day, just to touch on it, but we potentially have that impulse correction continuation, which would likely complete this leg, tap into this area here where there was potentially a lot of orders for the reasons I just expressed, and then we would have a 1, 2, 3, which lines up with a sharp hook point, which price would likely react from. Okay, as I say, this might not be ready by the end of the day, but you can see from this price action here, it would only potentially take 2 or 3 candles to be down in this area here. So rather than put our ego on the market and say, oh, this is not going to be ready by the end of the day, it's maybe unlikely, but it could be ready by the end of the day. So just to make sure we're prepared, what I'll be looking for today, because of the size of this relative to the move up, and because we kind of we've got little inflection points sat just below here which price could gravitate to. I don't think it will, because they're quite close relative to the size of all this volume that's been built up. What I'll be looking for is I won't be trying to call the bottoms. I'll be looking for price to tap into this area, and then I'll be looking for a solid push up followed by a tight flag, and then I'll be looking to get long on the break or within the flag. If we had 2 confirmed tops, I would look to, and 1 bottom, I would look to get long. If we reacted from the first bottom, then I would be looking to get long after a retrace or a pin bar, as is my trading plan rules, looking to get long. And even if we only got the reduced risk entry on the break, I'll be able to manage this for something in the region of 8% up to the first high. And even if we stalled in this area, I'd be able to I'd be able to manage this for something in the region of 2.8%. And then, of course, if price kept going and the longer term target applied and I was able to manage this, then, you don't need to be a genius to work out that you can see the trend line there. There's a lot of profit potential on the table to the upside. So that is what I'll be looking for today, folks. I hope you've taken some value from this, and I hope it's provided you. This is not a signal service if you're watching externally outside of the Falcon community. I do share these videos within the community. It's not a signal service. I'm still a student in the markets. This is just to make you think, make you scratch your beard if you're a man and you have a beard. Make you scratch your beard a bit and think, oh, maybe I'm looking at the market, incorrectly, or maybe there's a better way of looking at the market, a more simple way of looking at the market. And as I say, that's what we do in the Falcon community. The brokers want you to believe trading's complicated so that you use 1,000 different indicators on your chart, because they know that these indicators are not necessarily, and all they do is clutter your charts, which makes trading harder, which makes it easier for them to make money. I figured that out quite early on, because I noticed from all the strategies that I created or I stole or I modified slightly, I noticed that the less indicators and the less clutter I had on my chart, the less money, I was demo trading at the time, less money I would lose, or the more profitable that I would be, generally speaking. So that's one of the reasons that I like trading this strategy. But that is enough from me for now. Of course, if I have a pair or pairs on watch tomorrow, I will bring you another one of these videos. Thank you very much for your time, and I hope you have a great day.